trade recommendations based on sentiment, how to exploit the herd mentality and profit. So what I think would have happened by now is that you would have seen my tweets now, and you're probably quite good at your technical analysis, and but it's letting you down. Perhaps you might be trading equities and you're looking, let's say the S&P 500, and your RSI is overbought and your ADX is pointing down, or your Heiken Ashi is printing a bearish candle, and everything points down, but yet the price comes up anyway, and you don't quite know why. If you're not sure about the sentiment analysis, you would probably assume that the market was rigged, and in a way it's rigged against the crowd, and that's really important because the majority are often wrong. And so if you can exploit the majority, the herd, then you can profit successfully. So what exactly is sentiment analysis? It's the study and observation of crowd behavior. Because we know that the crowd are often wrong, would be wise to do the opposite. So that's like the premise behind what we do. Do the opposite of the crowd because they're often wrong. So what we do here at Quasidb is unique because we measure their behavior mathematically over time. This value is known as speculative sentiment index. So that's the key thing. So we observe the crowd as is now, but what do they do over time, right? And that's the key, because there's two components. So the two components of crowd behavior. So there's the static nature of the sentiment. What is their bias currently? All right, so the static nature is the long versus short ratios. Now this is the Euro USD, and there's 29% long and there's 71% short. So the bias there, because we know the majority are often wrong, would want to do the opposite. Okay, now look at the volume, right? 46,000 lots short. All right, now those people have got stops. They've got, large stops above price. So where do you think price is going to go? It wants their stops because the crowd are often wrong. So that's the premise. Okay, so you've got 18,000 lots short. So these guys, it's quite potentially they're going to be wrong. All right, so we've got 129,000 positions short. So it's quite a strong bias, right? So that's the static nature, what they are right at this moment in time. Think of that like a photograph, frozen in time. And then the dynamic nature of sentiment is the movement across time. So are they adding to that bias? And then we can see this, they're short, they're a lot short, they're adding short. All right, so that's that number is increasing. When that number increases, it's a stronger signal. So if they go short, price comes up. So that's the key thing. It's like a photograph, and then we've got like a movie, like a film over time. This is the dynamic nature, and this is the key. And I don't think many people do this. I think what I do is quite unique. Everyone looks at this and then they trade on that. I'm like, well, why would you do that necessarily? You want a confirmation over time, right? Because trading is constantly fluctuating and it's dynamic. That's what trading is. It's never stationary. It's constantly evolving and moving. So that's the two components of crowd behavior. So why do we study the crowd behavior? So it can be effective in detecting new trends. So for example here, that could be a new trend, but we'd want to wait, for the confirmation, you see. So since we know the crowd is largely uninformed, they have to trade with only a vague idea what's actually occurring and rely on emotions and feelings instead to guide them. So when you first start trading, you'd enter the Euro USD and you'd probably look at your chart and think, oh, okay, it looks good for a short. But what you don't realize when you first start, or even if you've been trading for 10 years, if you're not aware of sentiment analysis, you're actually part of a dumb herd, okay? So you don't want to be in this crowd, all right? So this is like if you're new, or even if you're experienced, okay? So this is the experienced traders. So some of the majority are informed, but they become emotional. So even if they are unaware of this, and they're really good at technical and fundamental analysis, at the end of the day, they become emotional. The crowd is it's an entity that's just purely guided by emotions and feelings. There is no logic with the crowd. The herd will read a news event and they'll act on that without actually reading the fine print. The big headline will come out and they'll act on it. They'll trade that headline, and you see it all the time on Twitter. And so what we want to do, we want to know what the crowd does, and we want to anticipate, their behaviour, their reaction to that. So they allow emotions to cloud logic in their risk management, and since we constantly see the crowd hold on to their losses and they cut their winners, so it's to do with complacency and fear. So think about yourself for an example. Now go back in your trading career. How long have you held losses for? I don't know, are we saying like 3 days, 4 days, 3 weeks, a month? Right? Then look at your experience and think, well, actually, I've held onto losses a lot. Now compare that time to how long you've held your winners. All right. So perhaps you held onto your losses for, I don't know, 3 days. And perhaps as soon as you get into profit, you'll look to exit quick. Now, you're an individual, okay, but then think about how many traders there are in the world who do that. Now, there's a million, 10 million. I mean, I've even seen some stuff on the internet that's saying like 50 million traders at any point in time. Now, times that, let's say 50 million, times by that time that they've been in drawdown, all right, and that's a lot of money that they're incurring losses, over time. So that's 3 weeks on average in drawdown, times by, I don't know, perhaps you're down, I don't know, £500, and then times that by 50 million. All right, so the crowd are very often in drawdown and they hold on to their losses, but we have to think on the big picture, not just you yourself as an individual trader, but the crowd, right? So if you are an example for yourself, then just multiply that exponentially. And so that's a hell of a lot of money floating around that's actually at loss, it's in drawdown. So the crowd is a big source of contrarian data, basically. Okay, so it's important that you understand that and why we would study the crowd behavior. And if we use ourselves as a reflection and as an example, and then just multiply that by how many traders there are in the world, and that's actually quite a scary figure, right? That's a lot. That's hundreds of millions of dollars in drawdown at any point in time. And because they cut their winners short, I don't know, to do with fear, and you'd have to ask yourself, everyone's guilty of it, but what we do at Quasidb, we know where to exit, and I'll talk about that in a short bit. And because we know where to exit, we can take the emotions out, and what we do is very clever. Okay, so I'll talk to you that in a second. And therefore, since the herd disregards logic and is subject for highly emotional decision making, it would be highly logical to do the opposite. So how do we exploit the crowd behavior and profit? Well, first of all, we assess their sentiment, whether or not they're long or short, and then we see if they're adding to their position over time. If they do, that's great. Now, because we know there's a lot of people in drawdown, if they add to that, then obviously they're making the situation worse for themselves. So it's a strong signal for us. And then thirdly, we would see where they have their stop loss clusters. And now that's key. And I think it's quite unique what I do in this service. You wouldn't have seen it much on Twitter. I try and keep it quite private because it's so powerful. So what the order book software that I've got, it aggregates Oanda, IG, MyFXbook, Fibo Group, Forex Factory, Saxo Bank, multiple order books in one, right? And you don't get that anywhere else. It's incredibly powerful. And so if we know where their stop loss clusters are on average, on aggregate, across all those brokers, then we know where to target. We can physically see these liquidity zones on the spreadsheet I made. This is an example of a stop loss cluster. This is the euro yen on the 4 hourly. So this is their stop loss cluster up here. You see the size 5.8. That's quite a large stop loss cluster. That's probably, maybe $1 million up there. I don't have information how much that stop loss cluster is in real terms, but it's a lot of money because you think about globally, right? This is a order book that covers 10 brokers, so it's very powerful. So there's our SLC, our stop loss cluster above, and there's our SLC below. Now the bias here is that we've got a buy signal because here they're 26% short. They're mostly no, they're 26% long and they're mostly short. Okay, so 74% short, 26% long. So because the majority are selling, price comes up. Now the reason why, when people enter, right, so they sell here, they've got their stops up here, right? So that's going well for them. Oh, but then it takes their stops. But then what they'll do, you'll see, is that they move their stops. And then more bears come in, and then they put their stops, price comes up, they'll move their stops higher, price comes up, and then move their stops higher. So as long as we're constantly aiming for that stop loss cluster above, because we know the bias, then we'll do okay. Now the monthly pivot is an excellent strategy to use because that's your technical bias, right? If we were to enter there, that's 100 pips already, and we're not even booked profit yet because we haven't reached the target. It could even come up more because this is the pain zone for the bears. They'll move their stops, but it makes it worse for themselves. So that's how it works. They enter short, but they've got their stops up here, and price comes up, but they'll move them. Very rarely will they actually allow themselves to get stopped out, so then they can reverse. Rather, they're just waiting to draw down in complacency, and they're like, oh God, it's going bad. Oh, what am I going to do? And we're eventually going to get to a point where we're going to get to an extreme where that size becomes so large, the banks will just push it, take it, price comes down. And that's what we'll do. This is the bank strategy. This is what we do at Quasidb, right? So this is the FX SSI ratios. This is the movement across time, selling. Now, perhaps you've not seen my videos before, but so what I'll do is simply you follow this, okay, with your eyes, and as I come down with this line, right? At that point, they sold. Up it goes. Continue to hold. Up it goes. And you see how it works. So that's that. So it's quite cruel. It will come up to a point where they'll just have to give up, and it's painful for the majority. But that's what we'll do. We exploit the majority and their herd-like behaviour. See that quite often, they've got a vague idea of what's actually going on. If you're not aware of what your peers are doing, you're trading, blind basically. And you see a lot of people on Twitter, they're doing signals, and they don't actually know what their peers are doing. When you consider the money that's at stake and what banks do and why they would do it, then that's a key. It'd be absolutely totally logical for banks to get that. Why not? Because you look at your pivot, it's above. If you were to place a 100-day moving average, it'd be pointing up. Technically, it's bullish, but yet the retail are wrong. They're counter trend trading there, as you can see. So it makes sense it would come up. It'd want to take their stops because price is coming up, right? So it's infuriating to see. I see it a lot on Twitter, and it's frustrating to see unless you know what's going on. And through Quasidb, you'll see, okay, and you'll learn how it works. And this will explain why your technical analysis sometimes fails because you're not aware of the current ratio and the movement across time. So disclaimer, so this is just to say you'd want to use a technical and fundamental analysis with strict risk management and to know your exit at all times. So for example, here, say if we were to enter at monthly pivot, we would perhaps wait for a bullish high Kanachi candle above the monthly pivot or whatever technical analysis that you prefer. So you obviously always want to use the technicals, and then you'll be okay. And the aim of the service at Quasidb is to provide customers with a powerful directional bias, and it's no way a guaranteed get-rich scheme. Rather, it simply informs us of the high probable trade opportunities based on the fallibility of crowd behaviour. Because we know that the crowd's often wrong, as we can see on that, it's quite clear, and you see it on every instrument, on every symbol, on every index, commodity, and forex pair. The crowd are near enough always wrong. But sometimes they are right, and the reason for that is because if they're always wrong every single day of the year, they'd give up, and then that's a big liquidity drain for the banks. So by allowing them to win, they come back to the casino, and that's a key thing to understand. Retail don't always lose. There's like a 20% margin of error. There's 20% of successful traders at any point in time. So we have to bear that in mind. And so what else do the customers receive? So you'll get a spreadsheet, which is quite comprehensive, and it will detail what the retail are doing in real time. You'll see things unfold before your technical charts will tell you. So that's really good for a bias. So you'd want to use your sentiment first to get the bias, and then you look at your technical, but use the two together. That's very important. You wouldn't ever trade the sentiment on its own, and you wouldn't want to trade the technical on its own because you're trading blind. So what's quite good about this is that I do a risk on, risk off calculation for global risk. So we would know when the S&P 500, when it tops out, because we'll see the sentiment. When markets have never crashed when there's an abundant fear, and there's so much fear in the S&P at the moment. It will continue as long as that fear persists, right? And we'll know when people start going long, like the dumb herd, the crowd, then that's a warning sign. And if they overtake the 50%, then we'll know, and we'll see on our dashboard that the risk will be off. When they finally go long equities, and then we'll know. So that will be key, and we'll know in advance of the big decline that we'll have when it happens, and this will be the driver for the move down. I can absolutely guarantee you this would be the reason why. Is because of the dumb money flows. The smart money do not want the dumb money to go long, okay? And so you'll get twice daily bulletins with the stop loss clusters. So you can target these if you wish. I recommend that you do that. I do it. It's really good and profitable. It's not guaranteed that the stop loss clusters will be triggered every day, but it happens frequently, all right? So sometimes the stop loss cluster is dormant above, and it's just waiting just for the right time. You can think of it like, say if you were going to eat a chicken, you'd feed the chicken first and then it will get fat, and then you'd kick the chicken. So sometimes the SLCs above or below, they just lay dormant for a while, and you'll see that the retail will add to their stops, and then therefore the stop loss cluster gets larger, and the larger it is, the more attractive it is for the banks. And so you get access to me with any questions, and I've got over 10 years experience. I know what I'm talking about with the sentiment. I'm quite good at the technicals. So yeah, I'm here for you anytime. If you want charts, then you can ask. And we also do bank forecasts for upcoming data releases. So say for example, we've got retail sales. We'll know what TDS think, or Rabobank, or I don't know, Citi, and they'll release their forecasts, and we'll get that well in advance so we can prepare. And it's especially important to know the sentiment when these things happen, because say for example, say the dollar was a sell and this data comes out, well, it's still a sell afterwards. It's not going to suddenly reverse on a data release. So that's something to bear in mind. People think, oh, it was a good NFP, but why is the dollar doing that? Well, what was it doing before? And so the spreadsheet that I will give you access to, you'll know why and why things work how they do and how it's engineered. So when you don't know about the sentiment, you think it's rigged, but it's only rigged towards the majority and the crowd. They're largely unaware, and they'll remain so. And that's good because it's easy money for the banks. So quite a long video. Do apologise. Hopefully you stuck by. And yeah, hopefully it's useful. And just let me know if you've got any questions at all. And hopefully it's an eye-open video for you. And I'll speak to you soon.